thank you all for being here. I hope that everybody that's listening has a couple takeaways. Hopefully a lot of takeaways. We will be sending out this presentation to anybody who registered. And feel free to ask questions if you need to ask them anonymously, or no questions is a bad question. So, it might be something that somebody else was thinking about. So the more that you ask and the more engaged that you are, I think the most you'll get out of it. Let's start with some introductions. We'll start with James Mathias. He is Optima's Executive Vice President, and he's also a consulting CFO. He has extensive experience working with C-suite executives. He's got a lot of experience in the not-for-profit space. He's also helped companies secure their business growth, securing capital, building profitability. James is a financial expert in not just not-for-profits, but in startups, tech, telecom, and investment banking. And James has actually ran and managed one of the largest public school systems in California as their CFO. So welcome, James. Thank you for being here and giving us your advice.
Thank you.
And then we've got Ann Nolee. Ann Nolee has been working with me for years. She's one of our exceptional controllers. Love having Ann on the team. Ann has 15 years of accounting and finance experience. She worked as a financial systems manager and a controller for multiple companies within the tech, advertising, and marketing spaces. She did begin her career in public accounting, as in many of our consultants went the public accounting route, and then they decided to start consulting and giving advice to the many clients that Optima has. And she began as an auditor. That's always fun, right? Being an auditor. And she got her CPA during that time. So welcome, Ann. Thank you for being here.
Thank you.
And last but not least, Scott Beer, who is an amazing CFO with Optima. He services many of our clients and does a great job. They all really like working with Scott. He's a very personable man. He has 30 years of accounting and finance experience, and he began his career as a budget analyst in the U.S. Air Force. That can't be an easy job. And Scott has 2 decades of finance and accounting experience with publicly held companies. So that is the panel today. I'm our moderator, but the team has a great presentation ready to go for you. We will start with Ann. And Ann is going to share a couple of slides with you, and hopefully it is awfully beneficial. It's going to mostly be about your review and analysis of 2020. And what we'd like you to think about is when you're reviewing and analyzing what happened in the past, how can you use that to drive decisions for the future? And how can you use what Ann's telling you today to really make 2021 as successful as possible? So take it away, Ann. The floor is yours.
Hey, great. Reb, can you move to the next slide? Thanks.
Sorry.
All right, great news, everybody. 2020 is officially over. But now we got to start to take time to reflect on what happened. And then, like Jen said, how do we then take our knowledge and plan for 2021? So as part of that process, that reflection process, I really like to do a year-over-year analysis. This is just a general process of calculating overall trends, evaluating performance, and this is going to aid in your decision-making. So I like to approach this 2 different ways when you're looking at the income statement. A horizontal review will compare how each line compares to the prior year. So you're looking, how did 2020 perform in comparison to 2019? A vertical review is going to compare how each individual line compared to revenue as a percentage. So what you're doing is once you've done the math and you've laid out all the calculations, you're going to look at those changes. You're going to say, is everything within the range of normal, or is something exceptional in some way? And those items that you identify as exceptional, you're going to start to dig in and try to understand what happened. You know, what happened that was unique to this year, and what do I need to plan for? And so this is a quick example that I made up, this ABC company. But in this example, you can see that I've highlighted the variance on the horizontal of salaries and related. So we're seeing an increase in 2021 of 21% year over year. Now, when you look at it as a percentage of revenue, it is going up, right? It's 29 compared to 27, but it's not as huge, you know, it kind of moved in line with the increasing revenue. So we're just going to flag that item. We're going to look at it, say, okay, is there, you know, was that a one-time bonus? Was that a change in headcount? You know, just drilling in to make sure that you understand why the numbers changed, and so that you can take that knowledge as you get into your 2021 planning. So overall, it's just looking at line by line, making sure that you understand the variances and the changes. Next slide. Thank you. So then after you've looked at your income statement, you're going to start to review your balance sheet. For balance sheet review, I like to look at several ratios. These are just another method of improving your understanding of your overall financial position. There are many ratios out there. I'm going to just talk briefly on the 4 that I find most useful. So the first one is the current ratio. Current ratio is your current assets divided by your current liabilities. This calculates the level of liquidity. A general rule is that if you're under 1, it could mean that your company may struggle to meet its short-term obligations. So you really want to say, show that you're above 1, that you have the liquidity to get you through the next year. Days sales outstanding, otherwise known as DSO. That's your AR divided by your sales, and then times the period that you're looking at. In this case, we're looking at the full year, so it's times 365. This measures the number of days that it takes to collect payment after the sale is made. This is just a really good piece of knowledge as you get into budgeting, forecasting, understanding how long it takes you to convert your sale to cash. Inventory turnover ratio. This is sales divided by average inventory. This shows how many times a company has sold and replaced its inventory during a given period. This can help in a number of ways, just understanding, you know, from reordering, you know, it allows you to make decisions based maybe on space. You know, maybe you're looking at a larger warehouse, smaller warehouse, just understanding how you're holding your inventory. And last is debt to equity. This is total liabilities divided by your shareholder equity. This measures the degree a company is financing its operations through debt versus wholly owned funds. A higher ratio can mean that you're aggressively financing your growth. Could be, you know, related to or conceived as like a higher risk. So now I'm on the next slide, I'm going to show you kind of how these ratios look in an example balance sheet. So again, calculating it year over year. So you just have some point over point to compare it to. So where you can see the current ratio was 1.29, I think it is. My picture is in front of it on my screen, but compared to now, that current ratio has improved in 2020 to be 3.19. So you've kind of been able to make yourself more liquid. We've been able to be profitable and are in a good financial position. Day sales outstanding, again, you know, you're just looking, okay, there's a change there. You're holding your AR a little bit longer in 2020. Just understanding why those things might happen. You know, maybe you accepted another big customer with, you know, a change in terms. So just all of these are just ways to kind of, you know, reflect on what's happening and then position yourself to plan. You want to go to the next slide? So like I said, we're using this data to help tell your story. So you're going to take all those data points and then you're going to just reflect what happened in 2020. Well, we all know something very big that happened in 2020. And so COVID. So then you have to layer that in. How did that happen? How did it change your business? We have a lot of clients who are really adversely impacted by COVID and stay-at-home orders. And then I've had some clients who, they're in the retail alcohol sales who have had, great sales in 2020 because everyone's sitting at home drinking. So, just understanding, what happened, what did you do well, what didn't work, understanding the reasons behind your success, and then how does that flow into the future? Last but not least, frequency. So I like to perform a month-over-month analysis. I also like to compare this month compared to the same month last year. I think that the more times and the higher frequency that you do these type of analysis is just going to make your understanding of your business, how seasonality affects your business, just, it's going to really strengthen that understanding. So, but at very least, it should always be done annually. And yeah, you'll gain a lot from it.
Yeah, thank you, Anna. And I think a lot of it too is paying attention to trends, as you mentioned. What goes up, what goes down, what can you average out from 2020 to predict 2021? How can you focus on some of your key performance indicators and what is important to your business? I think most businesses, the current ratio is important, right? You always want to have that over 1.
Yeah.
You don't want to ever be insolvent and have a current ratio of less than 1. I don't know if Scott or James, if you have anything that you wanted to add on or any extra questions, any clarifying points?
I mean, I think the ratios she's looking at are the appropriate ones. I mean, you can always throw, like Ann said, there's a million ratios to look at, right? So you have to look at the ones that are important for your business. The one thing I do always look at in my clients is I look at the day sales outstanding on a 12 trailing months basis. So you can see kind of the trend in it. So if you're not getting to a quarter in and it's jumping up, you can start to see that trend. Maybe if you graph it over a couple of years just to watch it. And just to make sure that there's nothing that's going to pop out each month, right? And to your point, it could be seasonality, right? It could be you had a bulk of your fourth quarter sales in December or things like that, right? That could drive that.
Yeah, and for Jennifer, for me, what I like about it is I like that you get 2 views, the horizontal and the vertical, because if you're just used to doing one, like a horizontal analysis, there's some trends or information that you might not be able to pick out. And the fact that it's almost like it's making it multidimensional for you. So it's just a really good way to look at data in a more comprehensive manner. And so that's what I like about it, because, you get super busy throughout the year, and this would be a time to do that kind of deep dive into both different types of analyses. So I like that quite a bit.
Yeah, and one thing I will share that's a quick kind of a tidbit is when you're looking at your trends and you're drilling down into the information, you might want to look at the vendors that you're spending money with. And oftentimes we find even silly things that you're spending money on that you're really not utilizing. So when you look at your dues and subscriptions, for example, and it's remained the same all year, maybe it's gone up a little bit, why don't you look at who you're actually spending that $9.99, that $7.99, that $19.99? They all end up adding up. And when you take a look at some of those, you're like, oh, well, I don't even use half these things. You sign up for recruiting, with like Indeed or ZipRecruiter or LinkedIn or whatnot, and you just have this monthly fee. And so that's just one small thing you can do right now to look at some of your trends and what has stayed the same, what has gone up, and why has it gone up, and it's almost zero-based budgeting to a certain extent. Do you really need that to operate? So hopefully that's helpful for everybody listening. And with that, I think we'll move to slide 8, which is James. And James, floor is yours.
Great, thanks a lot. Yeah, I think the information that Ann talked about, you can use in your budgeting, right? I think one thing to remember is that if you haven't budgeted, you're a little bit behind the scenes, but there's still time to catch up. So I think you just kind of relax, take a deep breath, focus your efforts. Most likely you're done with year-end close, so you've probably got a little bit of dedicated time before taxes roll around. to really kind of build out the budgeting piece for yourself. Budgeting is super important both for large and small organizations. So as Jennifer talked about, when I was the CFO at Sandy Unified, we literally had about a $2 billion budget with multiple funds. And so the main focus area for us was the general fund, right? But we also had a budget at each different fund level. And I think in the total, there were about 19 funds that I used to help manage. And so it was a really giant comprehensive budgeting process. But it was probably the most important thing we did from a financial planning standpoint. We wanted to make sure we accounted for all the costs that we incurred and then all the costs that we were going to incur in the next fiscal year. The other thing good about that you should incorporate in budgeting is a forecasting view of where you are and where you're going to go. So just kind of budgeting 101, what is it, right? You know, why budget? What's the budget anyway? And what you're really doing is you're creating a plan. You're estimating costs, you're looking at your revenue, you're looking at resources. And the budget should really be kind of an active real live document that you use it on at least on a monthly basis where you're reviewing it, where your budgets, where your actuals, what are variances, what are driving the drivers as far as negative revenue or increased expenses. And as long as you have that budget set up and squared away, you kind of have a source of truth that you can go back to and figure out what's changed or what's happening. And you also want to incorporate some estimating into that as well. So budgeting is a key component. Did you analyze your previous year expenses? What do revenue and resources look like? That analysis that Ann just went over can really help you essentially create a really detailed, refined budget. The other thing I like about budgeting is that it helps you introduce the components of your strategic plan, right? And even a small organization should consider strategic planning, because strategic planning is really going to help you realize the top 3 or 4 goals and objectives that the entire company can get behind. And once you have that strategic plan in place, then you can really build a disciplined and a robust budget. So strategic planning can really be used to really refine your budgeting goals and issues that you might have. Can I have the next slide? All right, I talk about successful budgeting, right? You know, to be successful, budgets and forecasts, they need to reflect reality. So in a lot of instances, what happens is an organization will create their budget and then they kind of just leave it. And it's like a static document. Once they put it in place, they're not really managing by the numbers. They're not using it to essentially help them predict or project what could happen in the future, or if they're just on plan. And that's critically important for smaller organizations, right? Because if you're managing a multi-billion-dollar budget, there's probably some wiggle room for some mistakes. But if you're managing a small, you know, $100,000, $300,000 budget, probably not a lot of room for you to make a mistake. So you really want to make sure you've got that budgeting process nailed down. To be successful, I like to talk about budgets and forecasts, reflect the reality like I talked about. Changes happen all the time during the year, so keep that in mind. Material changes can happen and they can be managed within budget adjustments. So one of the things that we talk about from a budget discipline is when should we adjust a budget or not? And what I always like to talk to clients about are a couple of things. One is it a material change to the budget? Or as an example, in 2020, no one realized that we were going to have to shut down the entire economy for the pandemic, right? So that's a fundamental change. So most likely what we did is we reduced a lot of headcount to essentially kind of just keep the lights on. So that's a material change. So you would definitely budget adjustment for that. And then you would essentially forecast on the outgoing. So if it's not material, the way I like to manage budget changes is through my forecasting. And you can do both, right? But if it's a small amount that isn't material to the overall spending plan, what I like to do is just manage that through a forecast. And some people are a little bit different. And then Ann and Scott, have you had a different experience there that you could share?
Yeah,
material change to the budgeting.
Yeah, for me, coming from a public company, my long history of 20 years is, you know, we were updating forecasts every quarter, right? We would still want to see what our beginning budget was, so that at the end of the day, you can really, you get to the end of the year and you want to see really what was your initial budget, and to see how off you were on your initial assumptions. Because, you know, we all know when you come out of the gate, the budget's wrong. Once you publish it, you know you're not going to hit it. I mean, that's just how forecasting and budgeting works. But you want to at least do a good job and maybe have some scenario planning built into in the beginning and maybe look at multiple scenarios. At least that's what we used to do, for sure.
I agree. Yeah, I think generally speaking, I like to make the tweaks via a forecast and leave the budget kind of as is, because I'm writing, kind of watching that process too, judging how well that budget build process went. But, this year put a whole lot of challenges up there where it was required that you did a whole budget redo, come March. So yeah, when there was just fundamentally everything changed, then you've got to go into that document and make some changes.
Yeah, thank you, Ann. And I think one of the important things is when you're making these changes, right? So really what you're doing is you could be fundamentally changing your financial plan. So you create an evaluation process, right? That kind of monitors and helps you design a process to make any budget adjustments or amounts. You want it to be disciplined in your approach. You don't want to just make a change for no real apparent reason or no material reason. So that's why you want to have a process that the entire people that work on the budgets and look at budgets, you want to make sure they're all on the same page. And even if it's just a CFO and their controller, right? You want to be on the same page with your controller if you're the CFO and vice versa. And it's okay to write down a process, and then that process goes into your budget documents, right? That you can say, if the economy changes or our revenue forecast changes by X%, we're going to go ahead and adjust the budget on the revenue side. You want to kind of document that. That way you can use it as a guiding document going forward, and people can refer back to that information in case there's questions about why you may have made a change in Q1 or Q2. Ultimate for me, before we move to the next slide, you want to really be flexible, and it really should be reflecting your business and priority changes, right? The budget can be static, of course, but you want to at least then make sure you're managing the differences in your forecasting that you do against the budget. So you have good explanations against your variances and those kinds of things. Kind of how I like to do it on a day-to-day basis. Can you go to the next slide, budgeting versus forecasting?
Yeah, let me just chime in and say one quick thing. We've
Sure.
had a lot of customers who, we put a budget in place for them at the beginning of 2020, for example, and then everything had to get changed. And people were very fearful. Well, I don't want to change my budget. This is a budget that we said that we we're going to do. This was our big, hairy, audacious goal. We put it into place. We're not changing it. And I just want to reiterate that it's okay to change your budget. If you put it into place at the beginning of the year, maybe not a not-for-profit, right? Because a lot of them, put their budget into place and the board approves it. It's a little more time consuming and, a little bit more of an issue to change your budget. But if you have to reforecast, it's okay to do that. Don't do it every week. Don't do it every month. But if something major happens or something causes your budget to need a change, it's okay. Coming from an accounting firm, we're okay if you want to change your budget, but I think it's just communication, as James said, document why. All right, off my soapbox.
Well, it's kind of good that you say that, Jennifer, because a lot of times people think that by adjusting their budget, it's going to be a kind of a fundamental mistake. And as we've seen with this past year in 2020, we've got to really be flexible in all of our business processes. And one of those processes is essentially budgeting. So I think that's super important. So a couple of things. So budgeting and forecasting go hand in hand, right? And so it's, like I said, budgeting is you're creating the document. It's going to show how much you're spending in different kinds of expenses like people and healthcare, insurance, those kinds of, where's your revenue, where your sales going to be like. In forecasting, they're both valuable tools that you should be using in your planning purpose. And like I said, once you get your budget set, then the next thing you want to do is you want to make sure you have a robust way of making a forecast, right? And many people are going to forecast via Excel, which is really cool, but they're starting to make a lot of different kinds of forecasting tools that are pretty robust, that are almost kind of like an app design as far as being able to use. I know for me, from a forecasting, I still go to my time-tested Microsoft Excel because I know formulas and I can do pivot tables and those kinds of things. So I can do kind of like ad hoc analyses and stuff like that. So when I set my budget up, even when I budgeted, when I was managing a multi-billion-dollar budget, I still used Microsoft Excel as a heavy tool to help me forecast and do a lot of different analysis. The other thing in a smaller organization, especially some of these organizations that use QuickBooks, you always want to make sure you're leveraging your accounting system, right? So if your accounting system like QuickBooks or Intact or NetSuite or Sage 100 in the cloud, most of those have a module for budgets. And with QuickBooks, it's pretty easy. You can create a budget in Excel and you can upload it into QuickBooks, or you can go right into QuickBooks and you can bang out a budget using QuickBooks itself. So once essentially I have my budget done, 9 times out of 10 with my clients, I always make sure they upload their budget in whatever accounting tool that they have. That way it just makes it a lot easier to there's a lot of standardized reports you can do, like budget versus actuals and a variance report. You can look at different budgets by classes and stuff like that. So what I always try really hard and to guide my clients into is making sure that once that budget's set, you upload it into your accounting system, because then that really helps when you're going to start doing the forecasting and looking for differences in your spending patterns. So if it's already sitting there in your QuickBooks, as an example, that's a good thing because it's already set and you're ready to go. And all you got to do is print out a report and then start your forecasting. Scott, what about you or Ann? Do you have different experiences with your clients when they want a budget, or how do they normally do it? Do they use the accounting systems? They do it all offline in Excel?
I usually see it offline in Excel for sure, James. I'm pretty proficient in Excel as well, so I help my clients that way. Some of the accounting softwares aren't as flexible because you got to make sure you budget at the same level that you're actually recording it at, right? So it gets a little complicated sometimes, but I agree with you. If your accounting software tools have it and it's easy enough for you to implement, then you should definitely be doing it in your accounting software so you can just get those ad hoc reports right out, and it's a lot more efficient on a time schedule.
Yeah. Ann, do you want to share anything?
No, I mean, I would reiterate, basically, I use Excel as the primary tool as far as getting the doc prepped and all the analysis is going to be in Excel, where I can import the results into the financial system just so that you can, use that to do the reporting. I definitely will. But like Scott said, you're sometimes challenged at that point because you have to import at the, GL account level so that you can get the reporting out. So it's really, I do it both ways, whatever the needs of the clients are, basically.
Yeah, great. Cool. Thank you. Jennifer, could we go to the next slide?
I don't have the clicker. Rebecca.
So budgeting checklist, right? So, and I think this is applicable for both for-profit and nonprofit clients. So I used to work at Quest Communications. I was the director of finance at Quest Information Technologies. There we were another $2 billion plan. We were a wholly owned subsidiary of Quest Communications International. And the same kind of thing, I was in charge of the budgeting and the FP&A work there. And what I ended up doing, of course, is I created a budgeting checklist, right? And I think that's apropos to any size organization, because what that helps you do, it's almost like your month end or your year end checklist. You know how us accounting type people like to create those checklists so we can do a task, check it off, and move on to the next task. A lot of the tasks we do build on each other, right, to prepare the financial statements. So what I've done in the past is I've created budgeting checklists, right, because I want to automate as much as possible. I want to be realistic. I want to institute driver-based metrics. I want to consider what-if scenarios, adopt metrics for analytics, and review past performance, right? And so the other components of the checklist is to make sure I've captured all the costs. Like, what will be my revenue? Do I have new revenue? If I do, how much is the new revenue? Did I capture all the increases in my healthcare? Are we bringing on 10 more people versus previous year? So that checklist helps me essentially go through my mind and keep discipline and rigor as I'm going through the process, as far as making sure I remember everything and capture everything. The other good thing about it is your budget checklist can be used in any kind of communication material that you talk with your internal stakeholders. And I always tell my finance teams to, when you're talking outside of finance, you want to make the speak as general as possible, and you want to give them good information so they ask you less questions, or if it's a complicated subject, you may want them to ask more questions, right? So you can make sure they fully understand what it is. The other thing is the budgeting checklist kind of keeps everybody on the same page. We all understand what we're trying to shoot for and the components that go to building that budget, both for profit and for nonprofit organizations. I like that it helps you kind of create a timeline. I think Ann said that she was finished budgeting with all her clients back in October, which is great. If you can, honestly, if you had a timeline, you probably want to have your next year's budget completed by October in the current year. That's considered to me a best practice. So if you're able to do that, that's great. So what does that mean for me from an Ann standpoint? doing an excellent job in month-end close, producing the monthly financial statements, and she's so on top of everything that by October, she's actually almost finished or refining her budget for the next fiscal year, and probably just making a couple tweaks in November, December. That's really a good best practice to abide by if you can do that. Like I said, if you haven't done it already, there's still time. Don't sweat it so much. You just have to go out and go do it. Communicate early, communicate often, and communicate throughout the budget year. And that's both small companies and large organizations, right? Me, I have a lot of good experience with big public companies, and I also have a lot of experience with larger public kind of institutions where the ideas essentially kind of can transfer between one or the other. They're not specifically just for nonprofit organizations, nor are they specific just for for-profit. What it really is just good budget discipline. So that's one of the components of a checklist. Go on. If you go to the next slide for me, the FP&A slide. So what we talked about, right, is we talked about the different ways to analyze financial information and utilizing metrics and ratios. We talked about budgeting and why it's important, and forecasting and how you can use Excel to forecast. And honestly, what we've really been talking about is financial planning and analysis, right? So in FP&A functions, you've got planning, you have forecasting, reporting, and analysis. And in the budgeting piece is a critical component of FP&A. And we may not even think we're doing FP&A, but FP&A has kind of become a discipline almost unto itself, where they actually, if you're a large enough company, you would actually have an FP&A team where all they're doing is analyzing the financial information of the organization. Most of us don't have the ability to hire just a specific FP&A team, but you can still incorporate the best practices of FP&A, right? You can still plan, right? Because you've done that with your budget. You can still forecast because you're going to do that with Excel. You're still producing monthly financial reports that incorporate your budget. And then on an ongoing basis, you're analyzing that information. So I like to talk to clients about FP&A, saying you're probably already doing it. You're probably just not calling it FP&A. But what I like about it, though, is they're creating a real discipline behind it. And they actually now, like I said, have specialists that will do just FP&A activities. Like one of our COO is really good. Taylor is really good at FP&A functions and activities. And so I know from our perspective, he's an expert in my mind that could help companies with how to really refine their FP&A process. I've got a lot of experience in that. I'm sure Ann, and I'm sure Scott, you do as well. The point I'm trying to make is that I just want to make sure you are incorporating kind of the 4 tiers or the 4 blocks of planning, right? The planning, the forecasting, the reporting, and analysis. That really becomes critical, especially when in kind of a desperate year like a lot of companies had in 2020, right? If they've got these disciplines and they're conducting this rigor on a monthly basis, then the information and the management decisions they make should be a little bit easier because you're working on sound principles, sound facts, and sound data. And the more that you can provide that to your CEO or your CFO, the better they're going to be able to make solid business decisions. I also like to talk about it. If you grow and expand your internal planning, like your budgeting forecasting, you should continue to be refined or incorporate into an overall company discipline, right? So FP&A can essentially capture the budgeting, capture the forecasting. I think it's a super useful tool. And most of them are using FP&A tools and strategies and methodologies. We may not be calling it financial planning and analysis. And so, Jennifer, I know you kind of talk a lot about that. Scott, you and I have talked a little bit offline about FP&A and what you do with your clients, and we haven't had that opportunity, but I'd like to just grab your thoughts on how you think FP&A can really kind of hyperdrive your financial management.
Yeah, no, I think it's a critical part of the whole process. And like you say, James, I guarantee you most people are doing it in some form or fashion, but they don't have a dedicated, FP&A team because they're not a large enough company to have multiple people in that space. But I mean, it gets back to what Ann was talking about, analyzing the data, right? I mean, to me, the FP&A starts with analysis. Look at what's going on, what's going on in your trends, so you can accurately plan and budget going forward, right? And then it comes down to what is important things to report to the internal stakeholders, whether it's the CEO, the COO. I think of, my days back at Aldala, I had 3 or 4 different VPs to report to, and they all different information was important to all of them. So we had to kind of create a monthly reporting template that met all their needs, that gave them all the analysis that they needed to either adjust the forecast, going forward. And that was just coming out of the accounting and finance department, because it was really before FP&A was really this term that gets thrown around so much now, right? And this important factor of budget departments.
Yeah, thank you.
Yeah, and you can hire Optima to do this for you, if you're struggling and you don't have anybody in house. I mean, a lot of companies use an office manager / bookkeeper and then ask them to do a budget for them. And, if they're really good at putting together a budget, they probably wouldn't have a bookkeeper title. So, know that if you don't have the capabilities in house, that it is definitely something that we can do for you, even on an hourly basis, and it could be a project, but we are here to help.
Thanks, Jennifer. And did you have anything?
I was just going to add that if you have all of these disciplines in place, you're just better positioned to make a real-time change, like we had to in Q1 of 2020 when something like the world ends. You're just much better positions to make those calls in real time.
Yeah, for sure. And then last thing for me before I send it over to Scott, I think one of the things we need to do, planning, is we want to take a step back if you can, and you want to take some time to do a strategic plan or do strategic planning kinds of principles, right? And I think a budget is a component of a strategic plan, because that strategic plan is going to really help you understand your strengths, your weaknesses, what you have as opportunities, what you have as threats. And then you can kind of really refine your budget and know the income that you have and where you're going to spend the money once you get it in. And you can always, even though you might be changing your budget on a quarterly basis or adjusting it based on material impacts, you can always refer back to the strategic plan as like your guiding document to say, as long as we're staying, pretty much to the truth of the strategic plan, we can make as many budget adjustments needed as long as we stay with whatever you've set up a top 3 or 4 goals and objectives for the company. And that planning piece is normally a 1, 2, and a 3-year look, right? It's a little farther than just 1 year. And that's why I like the strategic plan to be a component of as you're building your budget on an annual basis and as you're forecasting. Thanks, Jennifer.
Yeah, thank you, James. Are we moving on to Scott?
Yep.
Okay, sounds good. All right. And just to preface Scott's presentation and how it really does tie in with what everybody else talked about today is, you want to kind of steps. So what did 2020 look like? How do you analyze and review what happened in 2020? How do you take that and plan and prepare for 2021 with forecasting and redoing your budget, just making sure you're fully prepared and at least have some expectations on what you can do in 2021. But this is also going to tie into how do you utilize the CARES Act? How can you best utilize PPP? What things should you be paying attention to? So this is all part of the analysis of what happened last year and how do we be as successful as humanly possible for this year. So this part, there's a lot of information here, and we tried really hard to give you the highlights. And Scott knows all this pretty well. So please do ask questions if we don't touch on something. There's literally hundreds of pages of data that we sifted through to give you the best information here.
Thanks, Jennifer. And getting back to my introduction earlier, when you threw out the 30 years of finance and accounting experience, it's evident in the gray hair all over me that I see looking at the screen right now. But no, thanks again. And you're right, there's so much information in here. We're not going to cover every detail of the new legislation, whether it's the PPP or the new rules for COVID compliance, or just some of the important deadlines we have coming up. The next 5 slides kind of touch on some of the basic parts of that. And we just want to cover those and make sure everyone's aware of it. And the key to the interesting thing, that segue you mentioned about how this all ties, I have a client right now that's applying for PPP2, but we've already done 2 scenarios of their budget if they get the PPP2 or if they don't get the PPP2. So we've already kind of did a scenario analysis on their budget going forward and what it looks like from a cash flow standpoint and employee standpoint, whether or not they're able to get it or not. So just touching base with that, many of you know that the Economic Aid Act was finally signed into law at the end of December. And is what that allows is for a second draw on the PPP. So if you were participating in the first time, most likely you will be able to participate on the second draw if you meet a couple of the new eligibility requirements out there. Two key things: first come, first served basis. There's a limited amount of money, and it only goes through March 31st, 2021. So you have basically 2 months to get your applications in if you're eligible. And in talking about the new eligibility requirements, the two major changes they made to it was, before it was under the first draw PPP, you had to have 500 or fewer employees. The new eligibility criteria is 300 or fewer employees. And then the one new thing that is a challenge to hit for some people, speaking like Ann was saying with her business, that her clients that are actually up in 2020 because of the alcohol sales, they're probably not going to be able to participate. But there are a lot of clients that if you had a down quarter in 2020 by at least 25% comparable to the same quarter in 2019, you could probably qualify for this. And if you look in that little table there, you could see that just these figures are in there. This company was actually up over 2020 over 2019 a little bit, but their second quarter, they qualified because they were down by 33%. So assuming they meet the other eligibility requirements, they would be able to apply for a PPP2 and get that process started. Next slide, please. To calculate your benefit, it's really interesting what they did. They made a little slight tweak to it. You get to look at your average monthly payroll cost over 2019 or 2020. The rule actually says like the 12-month period before you get your loan, but for ease of purpose of calculation, they allowed it to just be the fiscal year 2020. So in comparing that, you get to actually choose. And I would guess that the majority of companies probably have a higher average monthly payroll rate in 2019 because they most likely some had to furlough some employees in 2020. So you get to pick which one is ever higher. And then the multiplier is 2.5 times or 3.5 times, depending on what your business is. Most businesses will have a multiplier of 2.5 times, and the max that you can get is $2 million. So whichever way the multiplier you use, the max is still limited to 2 million for the loan. For corporate groups that have multiple affiliates that apply individually, they reduce that maximum to 4 million. The two things that are really key in this new legislation that were really important and got through was, first of all, the streamlined forgiveness. So for you people that were able to participate the first time around and have already applied for forgiveness and your loan is less than 150,000, you're probably kicking yourself for applying for forgiveness so soon, because this new process is supposed to be incredibly easier than the old process. I'm told by a couple of community bankers that they anticipate that it's a one-page attestation basically you're looking to sign, even though the documents haven't got through the SBA yet as far as what that's going to be. And the reason they did this is the SBA is incredibly behind in getting through all the applications for forgiveness. So this is going to help them with people that have loans of less than 150,000, if they can have a streamlined approach, and then it'll get them to processing the new applications even faster. And then one of the really key things that people were arguing about back and forth in the initial CARES Act versus the Economic Aid Act was the loans forgiven will not be taxable. So if you had a first draw PPP loan and you're going to participate the second time and you get it totally forgiven, it will not be taxable. And what's even more important is the expenses that you incurred to support your business and use those loan proceeds are tax deductible. So you basically are getting a double dip here, which is kind of unheard of with the IRS. So really good news for companies. And I know there was a lot of back and forth on whether or not this was going to get through, and it did, and it got signed. So get with your CPAs and make sure that when you're reporting that loan forgiveness, that you got that showing up in other income and it's delineated on your financial statement, so they know for sure what that is and it doesn't get caught up in other revenue or something like that. Next slide, please. COVID compliance rules. So this rule went into effect in September, and I'm guessing for the majority of businesses kind of just did their fourth quarter and really didn't pay attention to it. It went into effect January 1st of this year, and is what this new Assembly Bill 685 does. It's really about notification. So if you've had COVID instances in the past, there were really no clear rules on how you had to notify your employees. It came down to, what you did as far as best practices. Now in California, we have a law in place that basically says if you have a COVID incident at your workplace, you have 1 business day to notify your employees or subcontractors or independent contractors. And then furthermore, if you have what's considered an outbreak, so an outbreak would be 3 or more COVID-19 cases at the same location within 14 days. I don't believe it's the same company, it's the same location. So if you have a company with multiple sites and you have 2 at one location and maybe 4 at the other, you'd have it at one of the locations and not the other. But you have to notify your local health department within 48 hours if you have what's deemed an outbreak. So you really need to get with your HR departments and make sure that they're aware of this and everybody's communicating correctly. AB 685 does allow Cal OSHA to come out to businesses and issue citations if it looks like they're negligent in the process, or even shut down a facility at the extreme. The keys to mitigate this: establish a COVID-19 protocol and policy that delineates, safely return to work, cleaning, notifications, all the things that you would want in one of these policies. And if you don't have one, you need help with one, please feel free to reach out to us and we can help you with that. I had an issue with one of my clients that our HR folks came in and helped us around the COVID-19 and also the FFCRA under the CARES Act, and just did a great job for my client. So next slide, please.
So let me just chime in real quick. I know we're getting a little bit up on time, but it looks like we're doing pretty well. We've just got some important deadlines coming up. Scott mentioned banking and CPA, and I just want to make sure everyone knows that we have some really great banking contacts and some really great CPAs. If you don't have that right person in place or that right firm, let us know. We'd be happy to make any of those introductions. We have been helping with a lot of the loan applications themselves, helping them get pushed through some of our relationships. And then also with the forgiveness applications for last year, Optima can help you with any of that. We also, our HR team is pretty robust, so we can help you with the FFCRA, the FFMLA, come in and do the analysis. So please utilize all the resources that we are able to offer you, and we love helping people. So we're here. We're here to support you.
Absolutely. Thank you, Jennifer. Yeah, to Jennifer's point, the next 2 slides are really just about important deadlines. And there is on the last slide that gets into HR tasks I want to spend a little bit more time on. So I'm not going to really read this slide to you guys. Most of you are aware of the deadlines, but just to let you know, it is January 27th and 940s and 941s have to be filed. W-2s have to go out. 1099 should be out or going out. So I just wanted to put these deadlines in front of you and just remind you, you have a million things to think of and just don't want anything to slip through the cracks. So next slide, please.
And we will be sending these out to all of you in case you didn't write it all down or take a picture with your phone. Don't worry, anybody that registered, we'll send this and we'll likely send the live recording out. We'll put it on YouTube is my guess as well.
Excellent. And as what I want to talk about is these important HR tasks that Jennifer brought up on the last slide when we were talking about some of the issues under the CARES Act. Is what I like to do is when I was the CFO at Autola, and even I like to have my clients do it now, is in the fourth quarter going into the year, you sit down with your HR department and you review and update your employee handbook. You make sure that handbook is going to encompass any new changes that are coming into effect 1/1. You look at the minimum wage requirements. How's that going to change? Will your salaried employees still meet the criteria, whether it's on the calculation of their salary or whether or not it's the services and things that they provide you as a company? And also, I mean, this is a good time for you to look at, part of the budget process, right? If minimum wage is going up $14 and it's going to basically impact everybody at your company, not just the people that maybe get bumped up from minimum wage, but you might have people that have been there 3 years ahead of them and are only 50 cents ahead of that minimum wage. So in the budgeting process, you have to really encompass all this kind of stuff to make sure that you're changing your employee salaries to be commensurate with the change in minimum wage. Otherwise, you're going to have a lot of unhappy employees. It's a painful thing to go through, but it's something you have to do. Update your federal and state labor posters. Make sure, to Jennifer's point, she was talking, make sure you realize the benefits in the CARES Act. I can't emphasize this enough. I had one client that to Jennifer's point, was an office manager and accounting manager doing the bookkeeping and HR. And they had some people go out early in COVID and they didn't fill out the proper forms. So there's a compliance issue there. There's a potential liability issue there. And then they had what would be deemed now under the new Cook-Cal OSHA rules as an outbreak because they had 10 cases out of their 20 employees. And when they went to book the COVID benefits, they realized that unfortunately the accounting manager was one of the ones that came down with COVID, and that she had booked some of the FFCRA benefits early in the year for some of the employees that actually got COVID later in the year. It was a mess. So this is an important area. Make sure you're taking care of the benefits. If you've already, received some of those benefits under the CARES Act, make sure you have the proper documentation, make sure you have the proper forms filled out. And I will tell you that I had Optima come in, the HR team there, and they just cleaned it up, have helped mitigate the liability tremendously. And where they could get some benefit towards the end of the year, they were able to get some benefits. So it's just amazing how the rules that are around that and the documentation around that. So, and you would think that, my client was using a PEO, and you would think the PEO had controls in place, but they didn't. They let that one employee have more than 80 hours and they weren't supposed to. So just make sure you're dotting the I's and crossing the T's, folks. And that's it. Back to you, Jen.
Yeah, thank you. Great information. I know we squeezed a lot into just less than an hour, but again, we'll give you the slides and hopefully you found this really useful. We do have a couple of questions. One of the questions asks if real estate companies qualify for PPP. And I'm going to just quickly say any company can qualify for PPP. I think part of the Paycheck Protection Program is, do you have employees?
Right.
So I don't know if there's anything you want to talk about in terms of, 60% payroll. What else can the 40% be used for? That might be a clarifying point. And then, does real estate, I don't think real estate would make a difference other than the employee count specifically.
Yeah, no, as far as looking at the eligibility of the businesses, it gets down to employees. And if they're doing a PPP first loan, it's the same rules that applied before when the first applications came out. If they didn't get it the first time, they can still get it the first time. They don't have to meet this. It's my understanding they don't have to meet the 25% revenue reduction on the second loan if they're applying under the first. But have them reach out to us, contact us, and I mean, like you said, the rules around that PPP, Jennifer, that IFR that came out with, it's like 40 pages long. So,
right.
And there's a lot of questions and answers in that. We can definitely help them with that.
Yeah, I mean, the person did just type into the chat that they do have 10 employees. So I would say I don't see on the second round, if you had a 25% reduction on one quarter to the other quarter, let's take a look at everything. Yep. I think that there is one small stipulation, is that if 20% of your company is owned by someone in Hong Kong or China, you don't qualify. There's like some little tweaks like that. So depending on who actually owns a real estate company, if it was like the vice president of America, I don't think they qualify. I mean, there's like some tweaks there, but we can help.
Some new eligibility rules there that basically eliminated members of Congress, members of the president, the vice president, and basically anyone affiliated with China, to sum it up, it seems like.
Right. Right. Yeah. And then on the 40%, I do just want to clarify another change that was made on the 60% for payroll on the forgiveness and the 40% for other costs. It used to be just the rent, utilities, mortgage interest. They have now opened that also up to PPE equipment. Yep. And so if you had to spend money on more HEPA filters, on masks, on, Zoom, different types of technology in order to be remote, those things are also included in the 40%. One question that is still open here is that somebody had advised, the forgiveness, it's great to be forgiven federally, but California always likes to beat by their own drum. So they asked if forgiveness is taxable for California returns. I'll let you answer that. I think I know the answer, but
You know, that's a great question. I actually don't know the answer to that, Jennifer. I haven't done the research on the California side. I definitely did on the Fed side, but knowing California, I would assume that they're going to tax it.
they are. Yeah.
Yeah. Yeah.
I don't want to be the one answering all these, but I just did a webinar yesterday on it that I had to answer the question. So California is not allowing you, they're still going to tax you on some of it. I mean, luckily it's not as much as federal, but it is
Right.
definitely not zero.
Right. Yep. No, I definitely can see that.
Got
Great.
2 more minutes.
That was a great question, by the way, whoever asked that.
Yeah, no, thank you everybody who is asking questions here. Let's see if there's any other, I guess, is there anything else that anybody on the panel would like to say? It doesn't look like we have any more questions, but I appreciate all of your time. And if there's some closing remarks, you've got, a minute and a half.
I would just like to say,
I think I'm good, Jennifer.
Sorry, James. I'd just like to say thanks for everyone that participated, and you know what?
Yeah.
Take these things to heart, the budgeting, planning, analysis for 2020. And I just like to wish everyone a successful 2021.
Thanks,
everyone.
All right, well, you know how to find us. You can call our office. You will get a live person that answers. It's 858-283-1234. You can always email Jennifer at optimaoffice.com and you'll get responded to pretty quickly. And then check out our website. We've got a lot of great information. We've been sending out some COVID resource letters every single month since April. And there's just a slurry of information. I mean, there's so much amazing things that you can find by just going to optimaoffice.com, looking at our news and current information site, and you'll hopefully get some great tidbits and insights that we can help you with. So thank you for attending. Thanks, panel. Appreciate it. Appreciate your time.